great future. We're talking real money.
Hi there. I'm Don McDonald, and over there, clear across the country, sitting next to me, I don't know how we do this, is Tom Cock. Welcome to the Talking Real Money radio show, and then, eventually, podcast. 855-935-TALK is our phone number, 855-935-8255. And we will talk with you about anything money-oriented because we really do want to make your financial life a lot easier to deal with. And we generally talk about investing, saving, spending money in retirement. Not often do we talk about, well, ways you earn money that are outside of or make money outside of those arenas. However, one of my least favorite things in the world is multi-level marketing. I hate multi-level marketing.
Are you still bitter over all the soap you have in your garage? Is that the deal?
Actually, no. Actually, when I was a small child, my mother, trying to make a living, sold Swipe.
This goes back to something your mom did. Okay, we don't have that much time to unpack all that.
I know. I went out door to door trying to sell it for her.
At what age?
Third grade,
like 6 or
10,
something.
9.
Good Lord!
Wow.
Now I'm feeling bad for bringing this up. Okay.
Yeah. So, but anyway, that's not the reason I hate it. Why I hate it is because, folks, no matter how good the pitch sounds, multi-level marketing is just a barely legal pyramid scheme. And the reason we're talking about that is there was a great article. It was awesome in Bloomberg Business Week about a stock trading multi-level market.
I mean, it's
got everything in it.
Yeah, because you join the IM Academy and you get access to their trading strategies, the Yale of Forex, the Harvard of trading. The Yale of Forex and the Harvard of trading. And let me think. What they do is you come in and for a one-time fee of $275 and $250 a month. $250 a month. I mean, this is not cheap. But while the trading strategies don't seem to work very well, Don, I mean, through the article, talked to a lot of people, said, I never really made any money. And then, of course, if you join and you don't make money,
no trading strategies work.
They say you just didn't follow the strategy carefully enough.
Let's just start from that baseline.
Yeah.
Stock trading strategies cannot work in aggregate. They might work for one or two people for a while, but they can't work for everybody in the company, in the program.
And when I say they don't work, I should have been more clear. The guy that runs the whole thing, a guy named Chris Terry, it's worked for him. He's a multimillionaire. He's got luxury cars, private jets, apartments across the continents, and he promotes a world view. Why can't we all just get along if we all join IM Academy? I'm sorry.
Because...
Yeah.
I'm going to tell you why you don't want to be in multi-level in a minute. Just all multi-level, but go ahead.
Yeah.
Go ahead.
But this is worth reading because it shows you how people get sucked in. These are the friends of the friends, right? Mm-hmm. People get in and then they're promised huge. One of the guys working as a sales rep here earned $750,000 a month, not a year, a month, out pitching all of this.
He must have been near the top of the pyramid.
Right, exactly. The people at the top end up making, you're right, a lot of money. The guy running the place is also, there's religious overtones. He says, I listen to messages that come from God. God's trying to talk to you.
God. No, I'm not even going to do this. God is a proponent of multi-level marketing?
And trading, I guess, at the same time. So, I mean, this is worth reading. If you can't get access to it, then tell us
their Bible or their.
Tell us what you don't like about multi-level marketing. You were going to say what you don't like about it.
This is so simple, sir. This is so simple. Are you ready? Let's say, here's the deal. The first person who started it says to their friends, they get 5 of their friends to sign up saying, all you have to do.
This is it.
Is get 5 of your friends to sign up. And you'll be making money off of all of them. But the pitch is you got to get them, the 5 that you sign up, to get 5 more.
The downline.
The downline.
Yeah, right.
Here's the
and
problem.
they get access to these great strategies.
Once we get to 12 steps down, just 12 steps down, your downline is the entire adult population of the United States of America.
You're saying that'll be hard to do? Come on.
Tom and Don are talking real money.
In medicine, a second opinion might save your life. With investing, a second opinion might save your future. The trick is getting one without a high-pressure sales pitch. Well, I'm Don McDonald, and if you've been listening to Talking Real Money, you know that our goal is to help everyone create a brighter future by investing and managing money better. That's why, in addition to helping everyone on our show and podcast, we are also committed to making our 100% fiduciary advisors at Appella available to help everyone make the best financial decisions based on science. So if you're being pitched a financial product or a system, make sure you get a second opinion with no cost, no obligation, and no annoying sales pitch by going to TalkingRealMoney.com or call 800-386-3004. That's 800-386-3004 or TalkingRealMoney.com.
Your guides to a really great financial future. Tom and Don are talking real money.
I guess I gotta wonder when in this one you don't end up with all the soap left over. Do you left over with the ticker tape that you tried to
nothing.
trade on?
There's no ticker tape anymore.
Like,
where have
air.
you been for the past 100 years?
Waiting around for the ticker tape.
Apparently, you're just
not looking good on
By
the
tape.
tape.
According to the Consumer Awareness Institute, 99% of people who get into multi-level marketing companies lose money.
And again, you mentioned
99%.
Key point is that the separation between MLM and pyramid, it's pretty
You know what the
hard
rule is? But it's impossible to verify. The rule is supposedly that 75% of the products sold by an MLM must be sold to someone other than the downline.
That's not happening here. Every one of these people.
Every one of them's in the downline. It is an illegal. If you could prove it, you could probably prove it was an illegal pyramid scheme, probably, but you can't prove it. So you can never. If you can't prove it, you can't put people away for these things. And by the way, what sounds a lot like this? What popular pseudo investment sounds kind of like this, where a bunch of people got in when it was cheap, and then they keep
made a
getting
lot of money?
new converts. Think about it. Think about it. 855-935-TALK is our phone number, 855-935-8255. And Paul, thanks for waiting, and welcome to Talking Real Money.
Good afternoon. How are you guys doing today?
We're great, sir. Thank you for calling.
I need to start by saying I stand corrected. The last time I spoke with you guys, I made a comment about Mr. Buffett that was less than polite.
I remember that, yes.
Research.
Yeah.
Yes, sir. I did some research, and I was wrong about that, and so I just wanted to correct that before I got started. It's funny how we learn things as we get older.
I know, and you know what it points to is the need for all of us to broaden our horizons and
to be slower.
To be
because we have to make quick judgment. No, we make a quick judgment. Like I heard that now. This so yeah,
right? No, just
time.
Check them out, like you did. Yeah. You did it, and you found out that the people who said that were wrong. People are wrong. We're humans. We mess up a lot. Anyway, what else is on your mind, Paul?
Hopefully not the next answer, but okay.
It's Memorial Day weekend, and kind of in the light of it being Memorial Day, I know one of you guys, Tom's, lives in an aircraft hangar, and I was thinking about World War II and D-Day coming up, the anniversary of that. Tom, I have a favorite World War II plane. Do you have a favorite World War II plane? That was kind of my question.
Oh, come on.
Yeah,
you've
probably
got
do.
your I know you.
I
if
do.
Your favorite isn't what I think it is.
I don't think it is.
Oh, gosh,
my favorite is the one my dad was trained to fly, but didn't get to fly.
Oh, no, got to fly?
P-61 Black Widow. Great plane. Night fighter, forward-facing onboard radar, went up. I don't think they ever lost one in combat. Went up, looked at the field in the dark, said, wait, the bad guys are over there, went and shot them down, came home. But my dad was trained to fly in that plane, and then the Army Air Corps told him, sorry, we've got a lot of people to fly those. We need more people in the cargo
more
plane to the sky.
Bombers.
B-24 to go 130 knots or whatever. Anyway, so yeah.
Wow, that is a cool looking plane.
It's
that
a great
P-61.
plane. Yeah, P-61 Black Widow, great plane, 2-seater.
And I see it
Beautiful
has a
plane.
radar cone on the nose.
It does, yeah. Forward-facing radar. So that's my favorite. How about yours then, Paul?
I had a great uncle that flew a B-24, and I've always heard that was kind of a workhorse plane that did a ton of work. My second would be the B-17. I've read a lot about the people that flew those, but they were, I don't know, I think about different things with this time of year. I do have one little just funny thing for y'all. You always talk about how we learn about investing and how we start from one point and then look back and think that wasn't very bright. When I first started working in 1992 at a college, I knew I needed to do some investing, so I was going to open up an IRA back then at $2,000 a year. So I went to the local grocery store, went in the magazine section, and got a money magazine, and that's how I picked my first mutual funds. So, and of course, I did it the way I know now not to do it. I picked the one that performed the best in the previous year.
Yeah. Yep.
That's a disaster.
Because the fact of the matter is that there is great evidence, and it is substantial long-term evidence, that those funds that are the best over a 5 or 10-year period are among the worst most of the time in the next similar period. And Paul, thanks so much.
Yeah, there's some great examples of that. The Ark. But by the way, Paul, my dad flew in the B-24. Didn't quite finish that. So your favorite plane is the one he ended up with. And B-24 is mentioned on my license plate holder, too.
Your dad did a number of missions in the B-24.
I think it's 28 over enemy-held territory or something.
Which is amazing because, and another good thing about Memorial Day, it's the losses in U.S. bombing were gigantic.
Yeah, I mean, the recent series they just came out.
The percentages were higher than infantry losses.
Oh, yeah, for sure. Yeah, it's horrible.
So if you wanted a job where you were likely to die, you were a pilot.
No. Or crew member, because there was 9 guys or something in B-24, a lot of people.
Yeah.
So,
in fact, that was Paul. One of the reasons I liked that, that it drove that point home, that series, Masters of the Air.
People don't think about it, but yeah, it was a risky business for sure.
Oh, so risky. 855-935-TALK is our telephone number. That's 855-935-TALK. If you have something that has something to do with money, we want to talk about that something with you. So please give us a call. This hour, we're talking a little bit about multi-level marketing and about market timing and trading strategies. And the reality is, I want to get back to the trading strategy point. Not only is this, this is doubly bad, this organization.
This is IM Academy we're talking about.
IM Academy. This is article in Bloomberg Business Week.
Yep.
A guy named Chris Terry runs this thing, and it's an almost religious fervor. They have these giant rallies where people get all hyped up about the potential of this thing, and the whole thing is based on this idea that you can beat the market. And there have been a number of really big studies. One was done with traders because they could get better data in Korea. And again, actually, market timing and trading is a better strategy if you want to make money than multi-level marketing. Because
that's good to know.
In one of these studies that was done, they found that over a multi-year period, about 10% of day traders made money.
And you just said only 1% of those getting involved in multi-level marketing make money.
Exactly. Yeah. So multi-level marketing is even worse than day trading. So if
is that how they promote it? Worse than
day? They should. If they were being honest, they should. But the fact is, when it comes to money, and this is the bottom line of all of this stuff, when it comes to somebody using you to make money, if you expect they're going to tell you the truth, you are beyond naive.
Well, but they get caught up in it, too. I had a friend once who called, and I told her I wouldn't be in it, and she read me the riot. She was very angry.
But then she was naive.
It's only $100 or something.
Then she was naive.
It all ended up blowing up. Yeah.
Because all you have to do is think about it for about 2 minutes and do some simple math, which I did. I just did simple math sitting right here going, 5 people times 5 people times 5 people times 5 people times 5 people in 12 steps equals 250 million people.
And that's all the adults in America.
And one more step, It equals 1.2 billion people.
Now you're starting to work on China. So
it can work. They can work, but only if you get in at the very beginning. And those that work best, those who make out like bandits, are those who start them. So be the one who started it. Don't be the one who got in years down the road. 855-935-TALK. We've got lines open. Give us a call.
Tom and Don are talking real money. For your real life and real future, Tom and Don are talking real money.
You know, I was just kind of looking at the IM thing and how long it's been around. It's
not
been
that old, 6 or 7 years.
No.
Like
The late. It's like let's see, the late 90s.
Well, in 2018, the CFTC came along and said, you got to register here. You can't just do this stuff.
Yeah.
So that's good.
My thinking is that we're probably nearing the 11 or 12 range right now in terms of steps down the down line. 855-935-TALK is our phone number. Please call us. We'd love to talk with you this Memorial Day weekend or just after it. Well, we'll talk with you on it and then play the show later. And Dan, you're up. Welcome to the program.
Hey, good afternoon. How are you?
Good, Dan. Thanks for calling.
Hey, I just had a quick question. First time I've ever called you guys. I listen to you normally on the way home from work on Saturdays. And I was looking at, I normally do not invest in stocks per se. I do mutual funds and have got a decent portfolio on that. But I saw what was happening with NVIDIA and been watching that, and a couple of my mutuals also invest in them, but I see they're getting ready to do a 10-for-1 split. And I was wondering what your thoughts were on jumping in and getting maybe a couple shares and getting it split into 20 or 30 shares.
Splits mean absolutely nothing because the value immediately after the split will be divided by 10.
And I think there was a study not long ago by a guy named Larry Swedroe that looked at actually sort of what that meant to the stock prices post-split, and it's kind of what Don said. I think it's meaningless. I don't think it has any impact. And by the way, part 2 of this, frankly, Dan, would be how much is NVIDIA already up in the last, just this year? And then you take in last year, it's like, wait, I'm buying a stock that's already up. What is it up this year? It's still up like 70 or 80% this year.
2,400%.
Well,
in the last 2 years.
Yeah, exactly. I was going to say this year it's up about 90. But all you're going to get is you're going to get 9 additional entries into a book, but the same amount of money. Stocks don't go up just because they split. Correct. The only reason they split is to make their price look more affordable to small investors. But the fact of the matter is you own NVIDIA. You already own the exact, based on the market, you own the exact right amount of NVIDIA for today. You don't want any more.
All righty then.
Okay, you
Sorry.
don't.
All right.
You don't. If you're brilliant enough to find the next NVIDIA, go for it.
Yeah, let's buy that 3 years ago, and we're going to be very happy. But I mean,
when we get in this late, there's a certain
ball's a little cloudy for that.
Yeah, the thing is, there's a little bit of momentum in stocks like in NVIDIA that have this. So there is a momentum, but the problem with momentum is we don't know when the momentum runs out. So sometimes they continue to rise after they've risen a lot, but that's based mainly on people like you who are saying, well, it's gone up a lot and they're going to split it. It makes it look more affordable. I should buy some more. You are the driver of that momentum, but eventually there's the last one. And
I wouldn't trade momentum unless I was a professional, period.
Right.
There are exchange traded funds that use that as a strategy, but I wouldn't touch it. No way.
Keep doing what you're doing because you're doing the right thing. You are doing
use
the
your
right
mutual
thing
funds.
For both your pocketbook and your stomach.
Well, point taken. Thank you for your advice.
You're very welcome. Thanks for the call.
By the way, we looked this up. You go ahead.
Right, have a great weekend.
Thank you, sir.
No, I mean, what's the price of that now? Because I was kind of wondering what the most expensive stock out there. Do you know what it is today? Just on a per share basis?
No, I don't. Because
Berkshire Hathaway.
Oh, sure, because Berkshire never splits.
We never splits. So that's
because Berkshire knows that splitting is meaningless.
It really is. It's a promotional. It's a marketing thing, really.
1,064. 1,064.
And what was it 2 years ago? It's
Let me pull up the chart.
300 or something, or I don't know. It's
5 years back. Let's see. In 5 years ago, it was $45 a share.
Yeah, and you want to run.
5 years ago, it was $45 a share. Now, there's another lesson.
Why would you buy
here.
that? That doesn't make any sense.
Why would you buy that? Because the reality is they build something that is relatively easy to build. They build graphic processing units, which were mainly used for rezzing up video games. Anybody, really, the other chip companies can build these graphical interfaces, and others are starting to do it. When they're in huge demand, the supply eventually catches up with it.
Tom and Don are talking real money. Reality radio for a really great future. We're talking real money.
When it comes to stories like the NVIDIA one, I always go back to this brilliant, you were talking about Berkshire Hathaway, this brilliant piece of advice that will resonate, I think, forever from Warren Buffett, and that is, be fearful when others are greedy, be greedy when others are fearful.
It's good advice.
Right now,
yeah.
and it should be have been. We have a 5-year run from $40 to $1,000. It's not likely that can continue.
Well, no, if it's a good stock at 1,000, great stock at 2,000. No,
Yeah,
kidding.
So anyway,
Yeah.
be careful with that.
Yeah.
Just
I agree.
Just stick. The trick is we're not trying to beat the market. We just want to be the market. Just be it. If you being it, you've done very well in the past. Being the market has done well by you in the past. 855-935-TALK is our phone number, 855-935-8255. And Bob, welcome to the program.
Bob just dropped.
Bob dropped. Scott, welcome to the program.
Hi. My name's Scott Redding, and I guess you guys don't use last name.
Yeah, we don't care.
I'm one of your I'm one of your customers. Been there for 4 years. I love you guys' advice. I don't worry about my money. I had a person tell me that they were investing with Ron Blue, so I checked with Sean, one of your advisors, about Ron Blue Investments, and I see they're not registered with the SEC since.
Can you spell that for me?
Ron, R-O-N.
Oh, R-O-N.
B-L-U-E.
B-L-U-E. Okay.
Yeah.
Oh,
Yeah,
it's investing based on biblical principles.
Yeah.
Yeah, the Blue Institute,
Funny,
helping
another one of
Christians make financial decisions. That sounds to me like an affinity sale if I ever heard one, and that's a classic affinity sale, Tom.
Yeah, that worries me. One. Number two is you just said they weren't registered?
Yeah, that's what I'm looking up.
Yeah, if you look on, I tried to find their ADV Part 2, and I couldn't. And I saw that they had not been registered with the SEC, a lot of them, since 2018. I don't know what that means.
It means
odd.
It means that if they're giving investment advice for a fee, it means they're acting illegally. Now, what they may be. So you're saying your friend is a client of theirs?
Yes.
Then that means they're doing something that's very likely illegal.
Are they taking custody of his funds?
I don't know any of the details. I just wanted to find out what he's in for. And
wow.
It make much difference.
Unless they're merely selling insurance products, but it doesn't sound like they are. I'm looking at the Blue Trust. Now, let me just see if that is registered. It sounds like, wow, I hate to accuse anybody of anything.
Yeah, because we may be missing something here that
and that's
could
why
be
I'm
vital.
looking.
Yeah, I agree.
Blue Trust.
Scott, thank you for bringing this to our attention, too, by the way, and it's good to hear from you as always.
Blue Trust. Okay.
Thank you.
No, the Blue Trust is not a registered investment advisor, so let me see if they're operating under a DBA. Okay. Let's see. Wow, they're saying they're CFPs, trust and investment management accounts and services offered by Blue Trust. Huh. Wow, this is really...
CFPs, they have to be registered some way, probably.
Yeah, but wow.
That's what I thought. Yeah.
I'm trying to find any of their...
They're doing it.
It sounds like they're... I'm not accusing anybody of anything, but it sounds like they may be skirting the
regulatory...
the edges of the law, that they might be...
Okay.
But I'm telling you, it's really suspicious. What I see is incredibly suspicious. If I was your friend, I would not be dealing with them, primarily because unless they can provide him with an ADV Part 2 brochure, which, by the way, they're required to provide.
Yeah.
If they haven't provided him with one, there's a problem. Tell you what I'm going to do. Let's take a break here. Hang on with me just a minute, Scott, okay? Because I am going to go through and find some of their CFPs and look up their registration, because that might tell me a lot more. Yeah. Hang on with us a minute, because this is fascinating.
Tom and Don are talking real money.
Do you suffer from hodgepodgeitis? I'm Don McDonald, and hodgepodgeitis is a disease of your investment portfolio whose symptoms include lots of stocks, loads of random loaded mutual funds, and maybe an annuity or two. Most who suffer from hodgepodgeitis dread opening their quarterly portfolio statements. They feel lost and confused. Investing seems overwhelming and the financial future uncertain. If you believe you suffer from hodgepodgeitis, see a 100% fiduciary investment advisor immediately. A proper diagnosis is the first step to creating a portfolio with a purpose based on a personal plan. Start on the road to recovery now by scheduling a free meeting with an Appella advisor at TalkingRealMoney.com. There is no cost, obligation, or high-pressure sales pitch. Take the first step at TalkingRealMoney.com or call 800-386-3004. Hodgepodgeitis is not a real disease, but treating it has been shown to improve mood, reduce fear, and even lead to a brighter financial future. Results may vary.
Your guides to a really great financial future. Tom and Don are talking real money.
Wow.
I'm looking at the Ron Blue Trust, and
I gotta tell you, this is Scott. Here's the deal. From what I can tell, in 2017, the Ron Blue Trust and every one of their CFPs, CFAs, investment advisors, all of whom were registered with the SEC for many years, all suddenly pulled their registrations.
And they have endorsements from their clients on their homepage, which also
is illegal.
Seems strange. Well,
so,
it's
against the rules. Yeah, they changed those rules a bit. But here's what I find fascinating is that the CFP board does not allow you to practice under the CFP designation unless you're a registered investment advisor, is my understanding. So they think, I believe, and this is all speculation on my part, pure, unadulterated, First Amendment protected speculation.
Well, yeah. I mean,
it sounds like they think they found a loophole.
Right. Yeah, I think so, because they say they advise on $52 billion in assets on behalf of 10,000 individuals and families. So it is odd. Somebody's registered somewhere.
No,
right?
they're not.
$52 billion is
dude.
Yeah.
They are not registered anywhere. Their registration has been withdrawn. For them and for I looked up a half dozen of their advisors during the break. Every one of them was registered with the SEC as an investment advisor. Their registration was pulled in 2017-18.
That is very, very, I'd say, I'd never heard of that.
Massively suspicious is what I would call it. Since they're a religious organization, maybe they believe that they get a religious exemption of some sort.
I don't think that helps you in the securities industry, but
my guess is that eventually the Securities and Exchange Commission, unless I can't find any explanation. I cannot find any explanation. Pure conjecture on my part. But I can tell you that if I was looking at them as an advisor and there's no registration, then and who's protecting you?
Right,
Last I heard, God doesn't do financial registration.
Well, and there's other ways
regulation.
to invest in those sorts of things,
But they
that are
manage
registered.
portfolios. They manage portfolios. Investment management, it's right here. Financial planning, it's right here. They have actual separately managed portfolios, separately managed accounts.
That is odd that you can do that without being registered. I agree. So strange.
Right. I don't know. But wow, Scott, thanks for bringing that up, because I'd be frightened out of my wits to work with them. But hey, what do I know? 855-935-TALK is our phone number, 855-935-TALK. And Bruce, you're up next. Welcome to the show.
Hey, thank you, Tom and Don. Got a young man, 22 years old, who joined it's called the National Electrical Annuity Plan. He's contributing to it, and I went in to try to find out what's behind the plan. It's got low expense ratio, 0.25%, but I can't go any further than that. I don't believe that that's the only cost. I think they're investing in mutual funds, but wondering, how do I research this further?
Who's he work for?
This is IBEW.
NEAP, National Electrical Annuity Plan. He works for a tree trimming company.
So this is
they're using them for their retirement plan then, basically.
looks like a 457 to me.
Yeah, but there's nothing on this website that says it's a 457, and it says an annuity plan, and that I know how you guys feel about annuity plans, and so I'm trying to figure out, is this a good thing or not? It looks good on the surface, but I can't get past the basic structure of the plan.
Oh, it appears to me that this may have been an old, typical 403B, 457 style plan that used an annuity, but it appears they now do life stage. They call them life stage plans, and they're. Yeah, they are life stage funds, they call them, target date funds, in essence.
Okay. But wouldn't there be charges coming from those mutual funds then?
Right, but that's the charge is 0.25.
You think that's all in?
There is
I gotta believe.
There are fees associated with the accounts that it looks like it's. Oh, these are quadros?
It wouldn't make sense for a 22-year-old.
No, it wouldn't. It says $200 per quadro. But boy, are we getting some new stuff today. Pardon me?
Yeah, I'm sorry. I just
not at all.
Gone as far as I can.
No, we love
I don't
new
think
stuff.
so. No, because I think you go back to the company of which he works and say, put me in touch with your HR people. Somebody knows because they have to know.
Okay.
I honestly,
that would be my starting place.
It truly looks to me like they have, but it doesn't say who their manager is of these life stage
Don
funds.
is having the Let's Stump Don weekend.
No, I'm having a fun
Stumpers
time. I love doing this kind of stuff. And I'm looking.
But I would go back. But if you can't find anything, I would go back to HR and start with them.
Plan documents. There we go. There we go. Huh.
See, I think they're doing mutual funds, but I think they're loaded funds, and I think they're managed funds, and those funds aren't being disclosed.
Life stage funds,
because the NEAP is the holder of the plan.
Yeah, but it looks to me like they manage their own funds. I'm gonna look at another spot. NEAP. Life stage funds. I just do it on the fly. Wow.
Well, I don't want to take all your time.
No, you're not. No, this is fun for me. This is so much fun. You have no idea how much I love this stuff because it's just a challenge.
Well, this young fella, he started at 21, and he's 22 now, and on the surface, it's called a life stage fund, and it's a under 30 life stage.
Yep, I see that.
The breakdowns look okay.
The returns look in line. The problem I'm running into is that usually there is disclosure about the funds themselves.
That's exactly what Bruce is saying. You can't find them. I mean, here's an alternative too, by the way, as Don looks at this.
Okay.
For a 22-year-old, just to diversify your holdings a bit, how about a nice Roth IRA that holds, regular old low-cost exchange-traded fund?
Okay. I hadn't thought of that. That's
I mean,
great.
that's a way to diversify out of a plan that may be expensive, which I think at the end of the day you're going to find out it is, because I think you're correct, Bruce. There's an expense. Yeah, I think there's an expense to the funds that they're not disclosing.
Yes.
But you could go open a Roth IRA.
And that's where you guys... So is there a limit on the IRA for these kids for a Roth?
$7,000 a year. $7,000 under the age of 50.
Oh, terrific. Okay,
which given the uncertainty about this plan might be a better way to invest his money anyway, unless there's a match. Unless there's a match.
Okay, meet it up to the match and then go to the Roth.
That would be exactly what I would say, and you could use either AVGE, the Avantis Global Equity Fund, or Dimensional's Equity Global Equity, DFAW, both low-cost exchange-traded funds.
Wow, isn't this stuff?
Excellent. Okay,
this stuff is so interesting. I cannot find any.
It is, and of course, yes. That's why
I'm telling you though, if they're posting a 0.25 and they have other fees, again, this is a situation where should the SEC look into this or the Department of Labor, they're going to go,
DOL.
Whoa, dude, you're not disclosing properly.
Tom and Don are talking real money. For your real life and real future, Tom and Don are talking real money.
Wow, I've got the Blue Trust and I've got NEAP now.
Now you got the rest of the weekend figured out there. There you go. Good luck.
I've looked up NEAP. I did some more research. It's a individual equity retirement plan. It is a defined contribution plan. It was created by the IBAW and the National Electrical Contractors Association. It is some sort of a fund that apparently they're managing for 0.25%. And I think that's right. It is not a publicly available plan, so that may be where we're running into some of these things where they don't have to disclose much. But very, very interesting. And speaking of very, very interesting, before we go, we have both been fascinated this week by the story of the potential theft of Graceland.
Yeah, you want to read about a financial
talking about wacky stuff.
It's
very
weird.
We got multi-level marketing, trading, weird investment advisors, an unknown annuity plan, and somebody trying to steal Graceland.
Yeah, I mean, the good news here is the peanut butter and Nana sandwiches will soon continue to be served.
Well, thanks to a court order.
Yeah, I mean, but the weird is that they got within a day of basically stealing this, apparently, by some company that you can't even get a hold of. Yeah, I mean, and this all goes back to a note that the daughter had supposedly for $3.8 million, which doesn't exist. It's a very I just want to read a financial whodunit. That's one to go read.
There's some sort of a flaky little company that only has like one of these UPS addresses or something like that, and they can't find out who owns this company, who runs this company. They've got documents that appear to be forged because the notary who was supposed to have notarized the agreement that the Presley estate owed them the money said, I never notarized this. But it's interesting. I spoke with a friend of mine who is a longtime real estate agent, and she said this is starting to happen on an individual home level, where people are going and getting public records and then forging quitclaim deeds and liens and the like, and trying to sell your property out from under you.
And there isn't a whole lot of ways you can protect yourself there other than checking your title, I guess, from time to time.
Well, you got it, checking your title from time to time. Yeah, that's the only, because what would happen, or you can check with your county recorders to see if there have been any liens filed against your property that you're unaware of. You can usually expunge those liens in most cases. Often, though, it takes going to court to do it. But this is something that's maybe growing in popularity, particularly if somebody tries it on something the size of a museum like and tourist attraction like Graceland.
Yeah, very odd. And before we get away, I do want to mention that one of our CFPs, Jameson McCandy, is going to be doing a class, How to Prepare for College and Pay for It. Wow. If you're here in the Seattle area, that's going to be Saturday, June 8th in Redmond. Online, virtual, Tuesday, June 8th.
30.
You can take advantage of this simply by going to AppellaWealth.com and clicking on events. It's going to be a great, Jason's focused on, Jameson. I don't know why I'm calling him Jason. He's going to hate me now. But anyway, so take advantage of this great education. Again, on June 8th in Redmond, June 18th online, AppellaWealth.com. Click on events. Come and see him and learn more about all this. Got to know it.
And the Talking Real Money road trip gets underway really soon. Go to TalkingRealMoney.com to find out more.
The opinions and views expressed on this podcast were current on the date recorded. Opinions, estimates, forecasts, and statements of financial market trends that are based on current market conditions constitute our judgment and are subject to change without notice, including any forward-looking estimates or statements which are based on certain expectations and assumptions. Although information and opinions given have been obtained from or based on sources believed to be reliable, no warranty or representation is made as to their correctness, completeness, or accuracy. Information presented on the podcast is not personalized investment advice from Appella Wealth. The views and strategies described may not be suitable for everyone. This podcast does not identify all the risks, direct or indirect, or other considerations which might be material to you when entering any financial transaction. Past performance does not guarantee future results, and profitable results cannot be guaranteed. We hope you realize that the information provided on Talking Real Money is for informational, educational, and hopefully enjoyable purposes only. The podcast is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Appella Wealth, a fee-only registered investment advisor. Please see Appella Wealth's ADV Part 2A on our website for information regarding Appella's fees and services. Appella Capital, LLC, DBA Appella Wealth, is an investment advisory firm registered with the Securities and Exchange Commission. The firm only transacts business in the states where it is properly registered or excluded or exempt from registration requirements. Registration with the SEC or any state securities authority does not imply a certain level of skill or training. Appella does not provide tax or legal advice, and nothing either stated or implied here should be inferred as providing such advice. Thanks for listening, and please visit TalkingRealMoney.com for more information and important disclosure related to performance of any specific index or fund quoted in this podcast. And the lawyers get richer.